Hello guys, welcome to another video. So in this video I'm going to show you how to do what we call a top down market analysis and also come up with high odd type of setups. So if you haven't subscribed, please do so. Like Muzi Sambo said, it's the right thing to do. So let's get started. So the best thing that you need to do, guys, is to make sure that before you make any decisions, you first need to know how does the bigger picture look like. So it doesn't matter whether you are someone that likes to trade M5, or maybe your account can only hold trades that you're executing on M5. It's fine, but it doesn't mean you can just go to M5 and start executing there without actually having to check the bigger picture first, because otherwise you'll end up missing a lot of information and going in the wrong direction. Because of what? The smaller time frames don't really give you the bigger view of how that instrument actually looks like, or where it is most likely to go, which is why I will advise you that whenever you're doing your top down analysis, you need to make sure that you always start with the highest time frame, like I'm going to show you now. So here we are looking at crude oil and we are starting with the highest time frame. So it doesn't matter what instrument you're looking at, they all have monthly chart, weekly chart. So here I'm just going to use this one for demonstration. So the first thing, we start with the highest time frame, and then on your highest time frame you need to know, because remember, this is giving you the bigger view. You need to know where is the market going, what's the trend here, right? So with this one we can say that our monthly chart is bearish. All right, that's the trend. We are bearish, right? And as being bearish, we have now unfortunately hit a key structure, which is what? A support, a very strong area of support, which is the one that when it was formed, it made us go all the way up there towards 125 there. I think that's where we topped and then started coming to the downside. So now that we have hit a very strong area of support on a bigger picture, it means that I wouldn't be surprised if in the next coming months I see this thing going up to at least somewhere there, right? Because now if the bulls that are here at this support, the ones that manage to do this and go all the way up there, if they fail to defend their zone, it means now they are exposing the thing, and now it increases the chance of the price going all the way down towards the $40 per barrel, of which I doubt they will let that happen, but it's possible, right? But what you need to take from this is that you know that your monthly chart is bearish. You know that as much as you're bearish now, you have hit a wall. You are now at a support, and somewhere around there the price might struggle to break also, but this is going to be the biggest zone, which is what your biggest resistance. But also this is going to struggle to pass there, and then now you're at the support, and your bullish trend line is somewhere there, which is also, I think, most probably broken. So that's why I'm saying you need to make sure that you start with the highest time frame. From there you'll have a bigger picture to say that even when I'm getting down to my smaller time frame, at least I know where we're most likely to go, for like a longer run or for a couple of months or so. So that's your bullish your bullish trend line, which is being challenged. But here we are at the support. We can still get some reaction there, because that's a very strong support given the fact that when it was formed, what it has achieved, right? So that's all that you can do on this time frame. And then now you're gonna move down to the second time frame, which is your weekly now, and you will try and do the same thing and just make sense of what is happening here, right? We know that we are inside a monthly support. Now we are on the weekly, and weekly is also bearish, the same thing that we saw on monthly, and it being bearish. Now in terms of the nearest zone here on this weekly, the nearest zone starts from somewhere there, which is now hit, which is this one here, and we just hit it, and we're seeing now the price has hit a support, a H4 support, weekly support, which is fresh and it's very strong, and it is found inside a monthly one. So that's why I'm saying anywhere from here, it's very sensitive area. The price can be rejected and forced to go all the way up. And in terms of the trend line that goes with this trend, even if you put it there, that's fine. Even if you put it there, that's fine. But you need to know that this time frame is bearish, and now the problem is that around there we might struggle to break to the upside. So as much as you know that you're bearish and you're at the support and all that stuff, it means that even if you'll be buying, you cannot say I'm buying now and I'll place my take profit there. Yes, the price can go up there, but currently monthly chart you don't have a support, or you don't have a backup from monthly support, monthly chart. Because if you are planning a trade that you're going to hold for a very long time, you better have some backup from those time frames that are big, because they are the ones that are giving you a bigger picture, that can you be able to draw like a projection, like now the price looks like it's going to go there, because you can do that looking at a bigger picture. You cannot predict where the price is going to go from here, maybe for 4 months, by looking at M5 chart. You cannot do that. So that's why I'm saying, if you were to take a trade here and plan to execute and hold for a very long time, you need to make sure that the bigger time frames are giving you a backup. But currently we don't have. So that's why when you're getting your buy trades there, you are not going to be targeting anything beyond that. So that's what we're having on this time frame. So now we don't want to waste time. Let's move on to the next one. So these are the steps that you need to follow when you're doing your top-down approach. And now we are on what do you call this? We are on the daily chart. And on the daily chart, we are also bearish trend line there, and the resistance there, which means if you are buying, if you're someone that's trading daily, your TPs, and you get trades, your TPs must be at this bearish trend line or at that resistance, because those are the next opposing structures. When you're holding a trade, you don't want to act like you don't see that the price is hitting something here. It might struggle to pass there, because if you want to act like you cannot predict things, like, if I can put it this way, you cannot predict things like a certain zone or a certain trend line is going to be broken. No, you can only trade until those structures are hit, and then you exit, and then you let the market decide when it gets there what it wants to, because you'll be surprised or you'll be disappointed when you're saying your take profit are up there, but then you see the price coming back and then maybe hitting you on break even, like, but I knew it was hitting a trend line, maybe I should have closed. No, then why didn't you close? Because you knew that the price was not gonna pass that area very easily. So now you need to understand that if you are someone that's trading a daily, here's your daily support. So maybe, okay, let me just bring a horizontal line so that we can see exactly where that daily support starts. It starts from somewhere around there. So that's your daily support, and we still missed it by a small margin, but we know we're inside the weekly, we're inside the monthly. So if the price was to touch this, you know that you've got a backup from all those bigger time frames. You are more than welcome to look for buying trades, and you're not going to look past any of this. So that's where you're hitting your take profits. That's big enough. It's more than enough. And if maybe you have got more than one trade, when the price gets there, one trade is out, you have hit your first take profit, and then the stop loss that you had on the remaining trade that you want to leave running, you need to make sure you bring it up and push it above, so that should the price come back, you're not going to lose that trade. And should the price continue and do that, then you'll say, oh, now my daily is no longer bearish, is now bullish. If it is bullish, already I have a bullish trade. If I get a pullback, maybe towards a support, I'll just continue buying, because I know we are bullish. We broke that bearish trend line and maybe a resistance. So that's why you can say I can continue buying. Already you will have one trade from here, but it's risky, because the price can just hit that and come back. But that's the risk that you're willing to take, because you know that you don't have one trade. But if you only your account can only hold one trade in such situations, because now your goal should be what? Your goal at the moment is to do what? Is to grow your account. So which means you'll be targeting the next opposing structures. You don't look anywhere past that, right? So this is what we are having here. We're saying that we are more than welcome to search for buying trades, and you'll be targeting the trend line or that resistance. So that's what we're going with, right? Because of what? The location where we are inside the monthly support, weekly support, just around the daily support. So you can see that there's a lot of buy pressure that is mounting here, and it can end up pushing creating enough demand and pushing the price up. So let's check what is happening on H4. So this is how you should do your thing, your analysis. That's why I'm saying, even though you are someone that's trading on H4, you couldn't just come to H4 and make a decision here and then execute. No, you need to go back, go all the way up, and have a picture from monthly all the way down, so that when you make your decision, you make like a very informed one. All right, so this is our H4. We know everything what's happening. H4 is still very much bearish, and just like all the other time frames, and we can see that we have a trend line there, and we have a zone there. And those that are in the mentorships, those that took my course, they know that we cannot look for selling trades here, but rather the safest thing to do would be to say, because right now I'm more interested in buying, I can wait for the price to maybe let's say we put it like that. I can wait for the price to do that and take out this, and then when it comes to this newly formed support, that's where we are taking that. But at the moment, as much as you're still bearish, but this trying to sell from this is a no-no. It's a no-no. That's not a good zone. You don't even have to think about that. Yes, it can hold the price, but it's a very horrible zone. It's a zone that has got high chances of what being broken more than holding. All right. So now you are approaching those time frames where you want to execute from, right? You can see that you're looking for buying trades, but unfortunately, if you're someone that's executing on H4, at the moment you don't yet have a reason to enter. Maybe if the price was to, let's say, to fail to go up and then it comes down, maybe it goes down to the, remember that zone that we have below, it's what, it's a daily zone there. So if it fails to break this trend line and then it comes back, maybe it gives you bullish rejection candlesticks there, you can try your luck and buy from there. But currently, with what is happening here, we don't have a reason to buy. Maybe let's say you are someone that's executing on H1, maybe here you will get a breakout earlier. Yeah, so maybe here what you can do is that you can maybe put a trend line there and say this is the resistance. Let me wait for it to be taken out, then that pullback that I showed you, then you'll be catching that. So basically, that's how you do your, all in all, that's how you do your top-down analysis. You need to check what are the bigger pictures saying, so that when you are there on your execution time frame, and you are saying, I'm looking for buy and trade, you are not just making that up in your head. No, you saw the location from the bigger guys, the direction from the bigger guys, and then you're concluding that based on all of that and what I'm seeing on my execution time frame, I think it's best if I look for buy trades, or I think it's best if I look for selling trades, or I think it's best if I wait maybe for a couple of hours or a day or two. That's also a trading decision, to wait, because of what you're waiting for the price to get to a certain point before you pull the trigger. So it doesn't mean that when you're a trader you need to execute all the time. No, waiting is also a trading decision. All right, so that's all that I wanted to share with you in terms of how you do a thorough top-down analysis, right? So it doesn't matter what you like. You're someone that likes gold, you're someone that likes Nasdaq, you're someone that likes VIX 75, whatever. For as long as you know the approach, you know the steps, you know that you have to start at the top and work your way down, you will increase your chances of going against the bigger structures. You will increase your chances of what? Taking the setups that have got higher chances of working out, because of what? They have a backup from the bigger guys. That's what doing the top-down analysis helps with. We're not saying you'll win all your trades or anything like that. We're just saying you will be trying by all means to pick those trades that have got a high odd of playing out in your direction. All right, guys, so that's all that I wanted to show you. So please do not forget to like, share, or even subscribe, so that whenever I make more videos like this, YouTube can just suggest them to you, and even if you like, it will also push it to other people. All right, guys, I'll see you in the next video. Thank you.